Well, just as we thought we might have almost seen the back of the global financial crisis, some experts are warning that we might actually be headed for another big bust.
Yeah, with continuing political instability across Europe, a possible China slowdown, there are growing fears of another recession this year and possibly, some are saying, another big stock market crash. But just how bad is it? Let's sort out the fact from the fiction. And to do that, financial guru Scott Hayward joins us. Good morning, Scott.
Good morning, guys. Well, look, last night we had a good night in the US, so it's all buoyant apart from the sirens in the background. The US share market actually finished up 145 points, and what's been taking place is, you might remember the old AC/DC song, was it TNT Dynamite? And people have hit the panic button, but it's actually been TMT, so technology, media and telecommunication stocks that have struggled over the last week or so, but last night they did pick up. But yes, I don't think there is another global financial crisis on the way. The difference now is that, one, we've got growing, I suppose you can say, employment in the US, and our numbers also dropped last week from an unemployment number, which is positive. And also, you've got money which is pretty cheap, and what that means is that you can borrow money at around about 4 or 5% here to buy a house in Australia. And in America, interest rates are still very low, which means your companies like your McDonald's and your Walmarts, they can effectively borrow money and make money without, I suppose, costing them too much.
You talked about TNT, technology, media, television. In the States, there's a lot of talk that there are a huge amount of tech stocks that are overvalued and that they might be heading towards a bit of a bubble.
Well, look, they have, and I suppose you've seen what's known as price to earnings ratios being very high, which I suppose you could say a share market price of a stock compared to how much they actually earn, and they've been heavily inflated. We did see this in 2000 in what was then known as the tech wreck or the internet bubble, and you've seen stocks like Facebook and Twitter that have been heavily inflated. But I suppose you could say in the US, the recovery has very much been from manufacturing and technology. So what that means is that America is starting to make things cheap. So the old made in China has started to become made in America. And you've seen Silicon Valley and Microsoft and Google, some of these businesses have not only employed, but they've also been part of the US recovery story. So I suppose you could say at the moment there's been some short-term sentiment against them, but over the long term, I think if you are holding stocks in technology sectors, and I suppose in Australia it's a very small part of the market. In fact, Rio Tinto is actually bigger than the technology space in Australia. So I suppose you could say it's a very small part. But from a point of view of shares, I think if you are holding them, I think you just have to look at them with a long-term outlook.
Scott, let's quickly talk about the property market. We've seen extraordinary clearance rates, auction clearance rates in both Sydney and Melbourne, but there's speculation that the property boom is not sustainable. What would your opinion be?
Well, look, yeah, Sydney have had an absolutely spectacular summer. Our clearance rate is close to 80%. In Melbourne, we've averaged just over 70%. Last weekend, we had about 69% clearance rate. I suppose you could say the fact of the matter is that people are very attracted to Australia. They love the beaches, they love the parkland, and most importantly, they love our school system, especially primary schools. We've got a very good school system, and people want to live near schools, they want to walk to school and be part of that culture, and especially overseas investors, they come across here. We've seen areas in Melbourne such as Box Hill and Balwyn have been very popular for overseas investors, in particular the Chinese, and they are very attracted to the Melbourne and Sydney CBD area. So I think that the property market's still strong, but real estate agents in Melbourne can have a weekend off. Last week there was over 1,000 auctions in Melbourne. This weekend there's only 60 with the Easter break, so they can take a breather.
Okay, well that'll be nice. They can get a little rest. Hopefully you get a relaxing weekend as well. Scott, thanks for the update.